This is our Forex blog for June 16, 2011. And like most days, we really want to buy the currencies that are super strong and short the ones that are super weak. For the last few days, the dollar's been strong, the yen's been strong, and the euro and the pound have been weak. You can see the euro consistently is the weakest one across the board, and it was pretty much weak until about 7, started losing its weakness. And anytime you see, weakness followed by a little bit of strength, weakness again, that only lasts an hour, and then some strength comes in and there's almost no weakness. You know, because the euro dollar is down so much and our counter trend signals were showing that it's likely to get a bounce, it really did bounce. And so the dollar and the yen were two of them that you could have been watching and expecting a bounce off of. But until, really the signs of a reversal right here happened, until about 6 o'clock today, you would have been looking to sell the euro dollar. The pound really didn't give any kind of bounce signal. I really have no idea why I decided to try to buy a bounce in the pound dollar versus the euro dollar. Probably I just had too many charts up and didn't focus on the currency meter as much, because it's totally clear looking at this, the euro was the one to buy. I think the main reason I personally bought the pound dollar at the lows is because it didn't fall as violently as the euro dollar, so I felt safer scaling into a big position in the pound. But sometimes the ones that have fallen the most have the biggest amount of pips to go the other way for a decent sized pullback. So looking today, we're going to look to sell the euro dollar and euro yen until that weakness kind of subsided. You can see last night we had two NR patterns in a row. Whenever that happens, usually the second pattern, when it breaks down through the low, the trend's already down. That's a phenomenal trade right here. You can see our signal alerted you to that sell, and usually it stalls at or underneath the lower containment band. Here's my Fibonacci profit target where I thought it would be the maximum low of the day, and I did a pretty good job calling that. But when it's underneath the lower containment band, as soon as you see this weakness kind of subside somewhere around here, coming up to 2 o'clock, you might want to exit that trade. Maybe you'd be out there at 14 for about a 60 pip profit. And because this thing is down so much, I personally would wait for a two-way fib pullback before I'd short, and it didn't quite make it there. It came just a few pips underneath through the previous day's low, and the strength that it had all but disappeared. This is a little bit of a risky trade because it might just go down 10 pips and then explode up. It could be a 1, 2, 3 low about to form. But if you did short that, as soon as you're in, you can see it started to fall without that much weakness. So as soon as it started to go back up, you'd be out. And usually double bottoms, these are too close to really count that as a double bottom right here. I like to see at least an hour or two go by between them getting hit to give traders that are buying here an opportunity to buy and run it up. In this case, they didn't. But when it came back down again and didn't break that level, you can see it was far less weak than it was before. Kicking myself for not buying this one because it just exploded up. This is what I thought was going to happen in the pound dollar, and I was wrong. This one just was a perfect trade. Fibonacci profit target, nailed it. And I do those every night so you guys don't have to. Here, let me move this over here. Here's the pound dollar, and it was quite a bit lower than the lower containment band. So usually you get some pretty violent moves. Usually they work their way all the way back up to the hourly. And when I got into this trade, it really wasn't that weak. But we got, as soon as I got out of the trade, it popped. This is a 60-minute trend reversal buy, and you had some earlier counter trend signals up here. It was at my 1.618 longer term fib area. Nice trade. Unfortunately, I got out a little too soon on that one. Dollar CAD also nailed my Fibonacci profit target level, nailed the high. And this one I did sell up here around 86, I think my average scale-in price was. Beautiful reversal. When it's way above the upper containment band like this, especially when it hits my fib targets, there was a Fibonacci retracement level right above that. It was likely to pull back 20, 30 pips minimum. And this one, fell almost 60 pips. But earlier today, the dollar was strong, the CAD was weak. Looking at the currency meter, you can see a very strong dollar most of the time. The CAD was really weak till about 9:30. So earlier today, with a weak CAD, you want to buy the dollar CAD. You want to sell the CAD yen. Here's a CAD yen trade. As you can see, the currency was extremely weak until about 9, and on every single counter trend move up, as soon as it runs out of steam, you go short, and you can see it pull back. You had a bunch of 25 and 30 pip moves, and my first fib target found a little bit of support. Usually the second fib target, when it's this far underneath the lower band, is a phenomenal counter trend trade. I wish I had bought that one too. Let's look at the euro yen. This is one of the most phenomenal trades. I didn't take this. One of our traders did, and let me move this over here. This one had a counter trend signal right at 8 o'clock, and the weakness kind of fell off a cliff right here, and it's right at my Fibonacci profit target level. As soon as it broke that level, just incredible strength came in, and it pushed it up just violently all the way to the hourly moving average, which most of the time is the end of the move. Anytime a currency is down too much and it's way underneath the lower band, wait for some of the weakness to subside, like maybe right here on this bar. When it goes above that bar, you can buy, put your stop a few pips underneath the low, and this one took about an hour to work, but you can see it had a counter trend move here. As soon as the strength kind of subsided, it went down again. That's a decent pullback trade, especially when it's not underneath the lower band. And also another good counter trend signal, which really didn't generate too many pips today, is their Elliott 2-wave. Anytime it goes up, you draw your fibs on there, and usually at the first or second fib target, it's going to run out of steam. That's another reason why if you had bought down there, that's a good place to exit. If you had shorted here, it pulled back 20 pips, 20 pips, 40 pips. Never really went above those fib targets, but there were some nice scalps to the downside using our Elliott 2-wave system. Let's put the Forex blog back up. Again, the Swiss very strong throughout the night. The euro was weak, but it started to get less weak. The pound was extremely weak, and the CAD was weak. So you could have easily made a lot of pips selling the weakest ones: pound Swiss and CAD Swiss. Let's bring up the pound Swiss here. As you can see, this just pretty much went straight down, 150 pips. And when it's way underneath the lower band, don't get greedy. Draw your fibs on the last wave and just exit at the fib targets. If you had shorted right here, get out right here, look, to the pip. And the 1.618 usually it almost never goes underneath that when it's this far underneath the lower band. So if you had gone short again, which I wouldn't if it's too far underneath the band for me to risk selling it, get out with a small 30 pip profit on that. And once it goes up and goes down again, strength is more than the weakness. This is a nice perfect 1, 2, 3 low, and you got a nice little counter trend bounce off of it. Let's look at the CAD Swiss also. Super weak CAD, strong Swiss, and you can see this one just trended down all day. But again, when it's underneath the lower band, draw your fibs, and most of the time it's not going to go beyond the fib targets. Here's the 1.618. This one went about 14 pips underneath there, then violently reversed. So most of the time this is going to be the maximum profit that you have to trade with. Also, I'll end class or my Forex blog today showing our new FX IntelliTrend. It is a phenomenal tool for helping you stay into trades, and it measures the statistical strength or weakness, and it keeps you into these trades until the end. If you had gone short right here on this little pullback, for instance, right here, it soon broke the trailing stop, which initially is always wide, and as the price goes its way, it tightens it. It was so weak that it kept the stop ultra close, and then it had you out of the trade right here at 86, pretty much within 13 pips of the low. It caught the vast majority of the trade. And if you're looking to do a counter trend trade down there at the low, it got you in here out with a small profit. If you bought again here, you're still in that trade. It still hasn't got stopped out yet. So it's a phenomenal, and let's look at the euro yen also when it rallied up from the low. I would have bought this if I had been paying attention at 71, and you can see it pretty much kept you into this trade all the way up almost to the high here at 25. Now the hourly moving average is usually the end of the move, and you certainly would have wanted to exit half of your trade there and then with a trailing stop at the second half.